Thank you very much for that. Indeed, the Government of India has announced a major financial move converting 36,950 crore of its spectrum dues into equity. Now, this will raise the government stake in Vodafone Idea from 22.6% to 49%. And even though the government owns 49%, the operational control of the company will continue to remain with the existing promoters. The shares will be issued at 10 rupees per share, which is at a 47% premium to the 6.8 rupees that the share price closed in Friday's trade. Now, this news is a big development for Vodafone Idea because, for starters, it improves the company's ability to raise 25,000 crore in bank debt, which has been long delayed. Secondly, the conversion will also ease Vodafone Idea's cash constraints significantly, at least in the first half of FY28, according to analysts, which will help the company execute its planned capex and also, in a way, perhaps arrest the subscriber losses. Moreover, Vodafone Idea's annual dues to the government will decline over the next 3 years, and these are the numbers which IFL has put out. They're saying in FY26, earlier, the company would have owed 29,000 crore rupees to the government. That number comes to 18,600 crore rupees. FY27, once the moratorium comes to an end, the dues will fall by nearly 20,000 crore rupees from 43.5 to 23.5, and FY28 onwards, the decline will be close to about 10,000 crore rupees. So fairly sizable, even though the amount that the company still has to pay to the government is going to be pretty substantial. But according to analysts, this development could be a bigger positive for Indus Stars because it shows the government's continued commitment to maintaining a 3+1 market structure and a stronger Vodafone Idea. Now let's get to the brokerage views. IFL says government stake conversion postpones Vodafone Idea's problem. They note that the company's free cash flow remains insufficient for future payouts, and therefore they see the possibility of the government further increasing its stake in Vodafone Idea. That means continued dilution, and that could limit the upside for the existing shareholders. They say that if the government were to hypothetically convert all its dues into equity, its shareholding in Vodafone Idea would stand at 81%. They've got a reduced rating on the stock. Motilal Oswal says another lifeline for Vodafone Idea, but it's pushing the can further down the road. They say the key concerns still remain around subscriber losses. You want to stabilize that, debt raising, AGR dues. They've got a sell rating on the stock, but they've raised the target price to 6.5 rupees from 5 rupees earlier. And this is driven by the government's equity conversion at a premium. Moving on to Ambit, they've titled the report as Government Reaffirms Support to the Industry. They believe Vodafone Idea is best suited only for high-risk investors. They've got a buy rating, target price 15 rupees, because their rationale is the government has only converted its spectrum dues into equity. AGR is untouched, and that gives the government some scope, leeway, to consider further relief measures with respect to AGR dues, while Citi has placed both Vodafone Idea and Indus Stars on a 90-day catalyst watch, citing 5G rollout in Mumbai and progress on debt funding as the key triggers. So for Indus Stars, it's their top pick in the telecom sector. They've got a buy call, and Vodafone Idea, again, it's a high-risk call, buy call, target price 12 rupees per share.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.